Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with Darius Taba, who is the co-founder of Vertex. Darius also has an extensive background in trading, both prop trading and commodities trading and metals trading, so we'll jump into that as well. Darius, how are you?
It's good, sir. How are you?
Doing well. Thank you so much for coming on the podcast. Really excited to explore the Vertex protocol and some of those details, but I think it makes a lot of sense to start with your background. So maybe you could kind of walk us through that. I know you went to LSC, and maybe you could talk about your transition from LSC all the way to prop trading and sort of your career.
Yeah, so I went to London School of Economics a lifetime ago now, 2001, 2004. Um, and frankly, I kind of hated university from an academic standpoint. So I did sort of three things. I did a lot of partying, I played a lot of rugby, and then I actually started doing a lot of gambling. And the sort of gambling I used to do was kind of spread betting on sports. So I'd do a lot of like over unders, like buying points. And I started getting into a lot of like esoteric bets where I'd look for things where I felt there was a mispricing, but a mispricing that could potentially pay out big. So I had a lot of success betting on things like cricket and snooker,
Wow.
which I don't know how much you know about those, but they have a lot of points. So you can do games with a lot of multiplier effects to them. So it might be like one team's score against another team's score, like the number of points scored over a number of frames by different snooker players. And what that ended up getting me into, well, first of all, it got me thrown off a number of gambling platforms.
For being too
Um,
successful that they just threw you off? Wow.
Yeah, they don't like it when you make money
Oh,
because it was in these like really esoteric bets. There weren't many people doing those bets, and so you'd show up on the accounts quite quickly. So I ended up like setting up accounts in my friend's name or doing my own name, or I had one in my brother's name. My brother was like 12 at the time, or like all this random
wow.
shit. And yeah, I basically got banned from a bunch of gambling websites. I didn't make crazy money. I think I made about 20 grand or something, but for a student, it was like a lot of
Yeah,
cash.
for sure.
And then I had a friend through rugby, and he was like, I told him what I'd done, and like he knew I was a pretty good mathematician. Like I was always did competitive maths at school and stuff like that. He was like, you should look into trading. And I'd done at school when I was in finishing high school, I'd done some options trading. I was like buying call options on ICOs. So that was my like
Oh,
first run
cool.
up of some money. And then not on ICOs, on IPOs. And then I lost it all again, right? Like typical like boom bust cycle. And then I've been through the same thing with this gambling, right? Because then I had to go after bets with less edge, and then I lost all the money again.
Mm.
So he was like, you should try trading. Like, I think you'd be pretty good at it. And so I did an internship at Citigroup and basically got really into the idea of becoming an options trader. And then straight out of uni, I was an FX options trader at UBS.
Oh,
Um, and very quickly, I got moved around there. I lived in London, Singapore, Zurich. Um, I was put in charge of a book in around 2007. So time of the first half of the financial crisis, if you
yeah.
like. Did pretty well, got promoted quite quickly, and then was running Precious and Base. I was doing it with one other guy, and then he left, but like through the crisis, and that time, like, it's sort of one of those things of like right time, right place.
Mm.
UBS had a great Precious franchise, and then that options book just blew up. So we made like significant cash in '08. I
Oh,
was
that's
making
fantastic.
significant cash in '09, and then got poached to go to Credit Suisse, um,
So,
and then went to Credit Suisse and helped set them up a precious metals business and did a whole bunch of stuff there. Yeah, and then Bank of America after that.
so that's really interesting. So at UBS, when you were on the FX desk and then the metals desk, was that on a prop basis or was that mostly like facilitating customer flow, OTC trades, creating structured products
Uh,
type of stuff?
um, prop market making, let's put it that way. The thing with
Yes, like
like,
principle.
yeah, so most people, when they think about markets, they think of it from an equities framework.
Mm,
So they always look at this, you know, principal versus customer view of the world, right? Where like you either executing on the exchange for a client or you're just taking prop risk. Where in FX, on fixed income more generally, actually, like because of the way that the books work, right? You have like much more complex instruments, either pricing along a curve, or in the case of like the
mm,
FX vol market maker, you'll price anything from an overnight option all the way through to like 5 year, and you'll do any strike. So on any day, any strike. And what that means is because it's not on exchange, you need to act as principal to provide liquidity
right.
to your clients. And so there are two approaches to that, right? One is you market make the same way an equity guy would market make, which is basically for flat risk or try and be as flat as possible and try and chisel out the market. Or you can be what I used to call kind of prop market make, which is you lean the position one way according to where you think the RV of the market is, and then you're depending on customers to like trade against you out of the good position.
Yeah.
And that's kind of like how you end up having a book with a lot of turnover in an illiquid market, right? So my edge was always more that one than the first one. So
Hmm.
the way I made my name was by taking like extremely large positions in thinner illiquid markets, but on the basis of the fact that I kind of knew I was putting good bets in the book all the time. And over time, that portfolio would kind of come out as a bit of a Greek alphabet soup. I knew I was, you know, my risk was in certain tolerances that I was happy with. And just as you get good at that, your tolerance for what those numbers are just grows and
Mm.
grows, right? So, like, yeah, I was one of the larger gold traders on the street by the time I left those seats. You know, I was doing, you know, at one point, I think we were the biggest trader on the CME, biggest trader on the ETF,
Oh, wow.
on the options.
Oh, that's fantastic. Yeah, gold is
So,
a market that I like to look at a lot. What kind of flows or like what kind of like paper goes through on gold? Because I don't think of gold as a commodity that has natural hedgers. It's more of a, you know, maybe some central banks are buying it, maybe some jewelers, but you know, what kind of flow do you see on gold besides? Is it mostly spec
yeah,
paper or how does that work?
it depends on the bank seat you're in. I think honestly, I had a like luxury education at UBS. I think that business is probably the best business on the street.
Oh, wow.
Maybe, I mean, for options, it's up there. I think JP Morgan's business is really excellent as well. Goldman used to have a great business. I don't know what it's like these days, but like the beauty of that seat was you used to see central bank flow, private bank flow, mining flow, hedge fund flow, real money. So like all of those guys have different requirements. It would be like private bank guys tend to be vol sellers, right? They'll sell
Mm,
you volatility consistently. They tend to be bullish gold. Miners tend to sell volatility, but they tend to be selling gold.
mm,
Central banks will usually just buy gold outright, but they might do some option structure to help juice it up. Then you might do like a hedge fund will have very directional flow, typically buying vol, but like very aggressive gamma buyers. Then even within the market itself, the OTC market, so the spot options market, tends to be more sellers because that comes from private banking type
mm,
flow. But then, say the CME, and then even more the ETF. The ETF is like a lot of buying flow, a
mm.
lot. Where the CME flow is a bit more mixed in the middle. And then you'd get some other weirdnesses like ETF skew was usually more for puts. So you can normally get cheap call skew on the ETF because there's more equity people and they thought that
Wow,
way.
yeah.
Where on like gold itself, on the ETF, on the CME or on the spot, calls tend to be more bid because of people buying for like risk coverage. So it's just like there was just like all these little crazy pockets of mispricing, and like it won't sound like a lot to crypto people, but maybe the mispricing was out by like a basis point or
Mm,
two.
mm.
But then you would take these down in like a couple $100 million here, there, everywhere. And you do enough of those, and that adds up to real money.
That's really interesting. Yeah, that's and do you still follow gold today? I view gold very similar to Bitcoin in terms of the players, in terms of sort of um, the investment thesis in a lot of ways. Is that something
Similar
that
level of like cultish religious people around it. Yeah, yeah,
yeah, sure.
yeah.
Like you can know a lot about someone by knowing if they trade gold or not. Like that, you know.
Yeah, yeah, yeah.
So it's the kind of same
Yeah.
thing with Bitcoin. Like there's sort of a crypto ethos, a hard money ethos. Do you view Bitcoin and gold similar in those respects, or do you view them completely as separate assets?
Um, it doesn't really matter how I view them, to
Mm,
be honest. I sort of was never really that fundamental as a trader. I was always like sentiment based.
mm,
All that matters is other people view it like that,
mm-hmm.
depending on how the cycle is. And so I'll watch it or pay attention depending on how engaged with the market I am, or how how much sentiment there is into that narrative. It doesn't really matter in the end. If people are buying it more than selling it, and then people are buying one asset on the basis of the other asset moving, then yeah, it works. So at the moment, it's kind of working just because of everything that's going on with the US, and the yen carry trade's booting off, and yeah,
Mm.
there's like a few things going on there that are like pushing gold, and then I feel like Bitcoin people are sort of attaching to that narrative as well. Um, whether that continues or not, I don't really have any fundamental viewpoint on it.
Yeah, interesting. I was just thinking about sort of the player profiles you just described for gold. Like the miners are probably sellers. Same thing for Bitcoin, probably. The miners are
Yeah,
probably vol sellers. Probably the same thing for Bitcoin.
yeah,
The Bitcoin ETF, I think for the most part, when the market's bullish, like people are vol buyers. The calls queue goes nuts in Bitcoin. I would imagine it's probably similar to like the GLD buyers. Kind of just
yeah.
interesting to think about.
I think what you'll see when the ETF options really take off is that the call skew in BTC will start to get eroded a lot.
Mm,
Yeah.
I could
So
see
you'll
that.
because like covered calls are really a huge thing in
Hmm.
equity portfolios, right? And I'd be very surprised if there isn't like a BTC covered call ETF that comes out at some point. It's like almost certain people will start to build those structured products and other things around it.
Yeah, that's a great point. I think Grayscale is actually developing that right now.
Yeah, there you go.
And I could see that the narrative of like if I'm a pension fund and I'm allocating 2% to the Bitcoin ETF, why would I not sell covered calls against that? That's kind of like the
I mean, it's one of the highest volatilities out there. It's like great yield.
hmm.
Why not?
Yeah, very interesting. So, kind of moving on, how did you find your way into crypto? When did you first kind of come across this asset class?
Wow, we haven't even got to crypto yet. There you go. Okay, so so I kind of have a similar. I think everyone has one of these stories. So like my friend in so early, I can't remember. I think Bitcoin was trading on Mount Gox and it had gone to like $20 and came back down to like nine. It had
Oh,
the
wow.
crash, and my friend was like, "Dude, we should buy some of this." And I said, "What is this? I don't understand." So he talked to me and he's like, it's this money and you make it on the computer and like you plug your laptop in and then you get an account and then but you can have it like on your computer, you can just keep it on your computer. And I was like, dude, this is a fucking scam. I'm not doing this. Zero. He was like, come on, we'll put 10 grand. What's the worst that can happen? I was like, dude, I can lose 10 grand. This is
Yeah.
stupid. I'm not doing that. And obviously I'll be honest, even if I'd have bought it, if it had doubled in price, I would have flipped it. I mean, for sure, for sure. But it's sort of, that's how it first got in my ear.
Mm.
And then actually, when I got divorced, Bitcoin was around like $100. And I bought a little then, and I did flip some at like 200. So that was when I first started trading. And then I was sort of in and out a bit, just like punting really.
Mm.
And then when BitMEX started, that for me was like super fascinating because it was the first time you could do derivatives.
Mm.
And the perp funding, I don't know if you were involved then, but the perp funding, especially on alts, was insane. It was like 200-300%, and like persistent, like
Wow.
just
Wow.
went on and on and on, like for months at a time. I was like, this is free money. I'm gonna do this.
Yeah.
So I think market makers were making even more than because of the bid offers and everything. It was like pretty crazy. So I was doing some of that funding trade, just like manually, just clicking in and out and punting a bit. And then made some money in like 17, 18 doing that and like fucked about with some ICOs. And then drifted away from it for a few years.
Mm.
Like I didn't make mega money, but like I punted around and sort of had my interest, but I still couldn't see the use case for it. And then I was aware of ETH because of the ETH ICO. I also got offered that and missed out. I just said like, nah, that sounds like a scam again. Yeah, I hadn't learned my lesson. And then in 2020, when Bitcoin dropped to like 3,000, I was kind of aware that we're probably going to an inflationary cycle. So I bought some just as I figured it probably couldn't go much lower. And then that got me in again. So I was like flipping it a little bit. I think it paid for my double glazing. And then my interest was peaked through DeFi summer. I started fooling around with some smart contract stuff, and I was like, I was bored doing what I'd been doing at the commodities fund that I was at. So I was at a commodities fund for 5 years, and it's kind of a boring time to be doing that. So I jumped into a trading job, but realized like actually what I wanted to do was focus on building. And so I met my co-founder, Alwyn, and originally we were building on Terra. I had this idea for doing like a multi-currency trading product based on the Terra stablecoin stack. And so met Alwyn, and he's like kind of a genius as far as like smart contract programmers go. Like he can literally do anything. If you give him an idea as a technologist, he's kind of crazy, yeah. And so we met, we got on, and we raised money, and then the chain we were on just blew up.
Yeah, I remember that. How'd you guys navigate that?
So we had funding. It was like one of those things where we'd raised like $8.5 million, and we still had a significant portion of that money. And a good chunk of that was in UST. And it was one of those where it was good to be an ex-currency trader. So when the peg went, I knew this, I understood that this, death spiral thing was possible. It was so large, Luna, that like when it started to break, I was like, okay, this is dangerous, not worth holding on to. So we actually flattened out roughly, I think on average around 98 cents.
Oh, that's amazing. That's basically selling for the whole dollar.
Dude, on the Tuesday, we were out, and my team, because I don't know if you remember what happened was on the weekend it depegged, it went to like 91 cents or something, and then it bounced.
Okay.
And on Monday, I was just like, out. Let's just get out of all this. This is not
good
working.
Call.
And on Tuesday, it kind of rebounded because the last clip I sold was at like 92 cents or 91 cents. And then it rallied and went right back to like 97 cents. And my team were like, we should buy this back. Like,
you're like, no.
We're gonna lose 2 cents. Like, this is stupid. I was like, I think we've done it now. Why don't you just sleep on it? And then by Thursday, I think it was at like less than 50 cents, and it was in a total spiral. And it was just, it's one of those experience things where I'd seen depegs before, obviously not quite like Luna, but like you see depegs in currencies when you're trading EM, and even like at one point I was trading Kiwi and the
Mm,
New Zealand dollar was being defended and it broke. I've seen the yen be defended and that defense, they always break in the end.
right,
So once you see something start to behave irrationally and then someone's trying, the market's just going to destroy it.
right.
So yeah, we got out and then we had this pot of money, most of it left. We'd spent some money building and we had to let go of team and then rebuild. And we realized that all these things we built for this multi-currency trading were super applicable into just crypto generally. And so we decided that like Luna's broken, this is going to be like a credit crisis for crypto.
Mm,
So with the destruction of all that value, you want to go to the place where there's the deepest value, deepest pockets, biggest ecosystem, which means being on EVM.
mm-hmm,
And because we were doing a trading platform, we knew it had to be low gas, so we went to Arbitrum.
mm-hmm.
At the time, the choice was limited. You really had Arbitrum, Optimism, and Stark, but we didn't want to really write into Cairo because then we wouldn't have any like transferability between ecosystems. And so we just sort of randomly end up on Arbitrum and started building. And the initial feedback we got from people was, "Hey, this is really cool. We like it."
Oh, nice.
But it looks a lot like FTX. It's just FTX on chain. Why would we do all this like multi-currency, blah, blah, blah? It just feels like FTX. So, well, we think it's cool. It's self-custody. It's all
Yeah,
on chain. You know where your assets are. And then was it November, FTX went
yeah,
down?
November.
And we were like a month away from our testnet. And it was great. So we just knew like, oh, we have product market fit, the competitive platform. The reason why we didn't think it was safe is gone now.
Yeah,
Like, oh, okay, great. So we actually launched then, we did a soft launch for our mainnet by March, I think. And then last April we launched, so almost a year ago from now. And
yeah,
then since then, it's been growing. You've seen the platform, and yeah, that's
yeah.
kind of the story.
I think you guys have done over, is it 100 billion cumulative total volume since April?
Uh, could well be. Honestly,
I
I
think
lose
so.
count. It's probably in that region. Yeah, I think so.
So yeah, let's jump into Vertex into detail. So Vertex offers, so it's on chain, self custody on Arbitrum. Obviously,
Yeah,
people wake up after FTX because a lot of people get rugged. So the
yeah,
on chain self custody, which is really the crypto ethos, again reasserts itself as a true
yeah,
value proposition. So you guys offer both spot trading and perpetuals trading on various altcoins and the major pairs. But one of the
yeah,
things that's really interesting about you guys is you offer collateral, cross currency margin collateral. For anyone
yeah,
who's unaware, a lot of the venues, if you're trading Bitcoin perpetuals, you got to fund it with a Bitcoin. If you're trading Ethereum, and it's kind of segmented by currency. So you guys can actually offer one central location to maybe do spreads between coins and stuff like that, and the margin offsets
yeah.
itself.
Correct.
Can we jump?
Yeah,
Go ahead.
and you can use various tokens for margin as well. So like our main P&L currency is USDC, but you could, for example, deposit wrap BTC automatically. You don't even have to do anything. You just deposit it, you start trading perps. But what it does in the background, it borrows USDC from our money market.
Mm,
You get charged a fair rate based on a algorithmic curve. And then you're just trading perps, making, losing money, whatever. And at the end, you just kind of settle it all up in USDC. So it's super efficient. Like if you're a long-term ETH or wrap BTC holder, or ARB holder, we have ARB tokens or USDT, you can use those without incurring a tax event. Start trading, and then all the trading's on the actual P&L of the stuff you're trading, all the taxes on the stuff you're trading. So we just designed everything to work, basically.
yeah.
Like these facilities do exist on centralized exchanges, but you generally have to be permissioned for them, or you need to apply it directly, and maybe it's not intuitive. And the money market internally doesn't charge at a market rate, so it tends to be like very high rates for dollars, which is how they make a lot of money, to be honest. But Yeah, we just tried to build the thing we wanted basically as traders.
Yeah, that's really interesting. And I know like trades like the basis trade, which is really interesting today in CME futures, for example, that's hard to manage because you got dollars and then you have your futures in, it's not s- offset by the underlying Bitcoin, so you got to manage that risk. Here, I can deposit, whatever altcoin that you guys support and I could sell the perpetual against it. And even though in the background there's USDC kind of flowing back and forth on variance margin and all that stuff, um, my collateral goes up with my short perp, so it kind of offsets each
Correct.
other, and I can isolate that type of funding trade. What?
Correct. I mean, even more than that, you can actually leverage that trade up. So,
Mm,
like, one of the really interesting things is if our borrow rate for USDC is lower than the perpetual funding rate, traders will leverage by spot, sell perps against it until the two converge. So, the interesting thing there is like what we saw over the last 6 months, where BTC perps were seeing very high funding, right? Everyone observed that, maybe 50, 60, 70%. What happened was the dollar rates on Vertex started to converge with the funding rate. So if you
mm.
were just holding dollars on Vertex, USDC, you were earning 40, 50% on your deposits,
Oh wow.
whilst funding traders earned 70%. So they were earning 20%, but looping it many times. So they might be making 100%, 200%, 300% on their loop, and you're making 40, 50% just doing nothing. It's like embedding the Athena trade into the whole protocol.
Yeah, that makes a lot of sense. And is your money market rate based on some sort of utilization curve? So if there's a lot of dollar deposits on Vertex, then there's a big supply of potential funds to borrow. And if
Yeah.
those start to get borrowed, then sort of the interest rate goes kind of berserk. Is that how it works?
Yeah, we use an interest rate curve that's basically borrowed or inspired from Aave.
Mm-hmm.
So we have a inflection point. Once you hit that inflection point, it goes up very steeply, but up to then it kind of just targets an optimal utilization. So anywhere from like 70 to 80% of the asset borrowed sort of optimal. And then above that, the rates get very steep.
Yeah, interesting. Have you noticed? There's a couple more technical questions I want to chat about Vertex, but have you noticed any sort of differentials on the funding rates on Vertex versus some of the CeFi exchanges? Is there ever sort of deviations for whatever reason the market thinks there should be?
Yeah, yeah, we have. I think it tends to be that per dexes generally, and this counts for Vertex as well as like our competitors. If you look at a DYDX or Hyperliquid or AVO, the funding rates tend to run higher. And when I think about it, I think the rationale for it is really that market makers are having to put capital across like many different venues. And so doing a per arb is kind of requiring of like double the collateral,
Mm,
essentially. And I think what happens is basically they end up just requiring a premium to run that spread on a perp exchange to get the same value that they have opportunity cost for on a centralized exchange. So if they're making 20% on a centralized exchange, just buying spot and selling perp, this is sort of a bit overly simplistic, but I think that the logic of it works. You need the perp dex to be running around 40% because you might be like short on the perp dex and long on the CFI, and you want to make that 20% still.
yeah.
And I think roughly you see that. You see perp dexes will go anywhere from like the same as a centralized exchange up to about double. It doesn't tend to work the other way around.
Yeah, that makes a lot of sense. I wonder also if like the clientele in DeFi is more of a natural long sort of buyer and the potential like I wonder if it's still I think only a few market makers are really experts in market making DeFi, whereas a lot of market makers might be there's probably a
Yeah,
bigger clientele of market makers in the CeFi space as well to take the other
yeah,
side.
maybe. Typically, market makers get credit lines as well. They might get free credit at exchanges to help them settle their trades, or it might be end of day credit. So they get a line to facilitate their market making or arbitrage activities. Obviously, a DEX can't do that.
Mm.
And so it's kind of natural to see that the DEX is they just require like a higher return on capital because the market maker's putting their actual capital up,
Yeah,
right? So
I
if
see what you're
they're having
saying.
to hold the position, they're going to demand a higher value for that dollars that they're holding on the exchange because it's an opportunity cost for them to do something elsewhere.
Yeah, that creates a really interesting opportunity for DeFi net selling strategies to come in and take the other side of it.
I think so. I think it's a little bit chicken and egg in that I think there's, DeFi based perp strategies are still relatively constrained by activity open interest.
Mm.
You know, you see a lot of activity right now, but a lot of it is driven by institutional accounts,
Mm.
honestly. Like the
Interesting.
amount of retail on chain is still quite limited, where centralized exchanges still have that like bulk of retail money going through there, speculating on crypto, using perps as a vehicle for doing that. And that lump of people speculating generates the returns for people in terms of funding rates.
Interesting. Yeah, I would have thought that DeFi was more retail than that, but that's an interesting insight. So maybe we can jump into sort of your order book and AMM combination. Can you maybe break that down a little bit and explain how that
Yeah,
works?
I mean, it's pretty simple. The AMM really operates as a kind of very naive market maker on the order book.
Mm-hmm.
So, in truth, it doesn't supply that much of the liquidity that gets traded on Vertex currently, but it exists still for a few different reasons. So, one is if we were ever to withdraw the order book, which is off chain, the protocol would continue to operate as a entity in its own right. So it could just
Mm.
operate fully on chain on its own. If a market was to be listed that was a liquid, like at the moment we list quite a lot of liquid markets, but as we go further down the risk curve, can use the AMM as a way of seeding liquidity for different projects that we list. And the nice thing with that is it enables a lot of trading, Uniswap style assets, blah, 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 things like that. So you can be nimble in a way you couldn't be otherwise.
Mm.
And then thirdly, it's just like it offers a sort of way of integrating liquidity for projects where most projects start as either a AMM project or a order book project. Right, so you either get like a centralized exchange listing very quickly, or you just list on an AMM.
Right.
Once you're on the AMM, it's pretty hard to evolve out of that into an exchange listing, right? We offer kind of a transition.
Oh, cool. Yeah.
So as we start to list more long tail assets, which we will do like in the next year or two, that gives a path to market for partner projects, which we think is cool.
Yeah, that's really cool. Um, how about like liquidations and stuff like that? So what kind of leverage do you guys offer on Vertex and how does the liquidation process work?
So currently we offer 10x on alt and we offer 20x on BTC and E. We might increase that at some point in the next few months, but that's where it is right now. The liquidation process is actually very similar to DYDX v3.
Hmm.
So we use the concept of like an oracle and then the discounted value for a product. And then the product can be liquidated at a discount that is in between those two, right? So it depends varying on the asset, but let's say it's like a 5% discount and the return to a liquidator is 2%. They can buy that asset at a discount, then sell it on our market. They're incentivized to do that, so they get a small return on all the assets they trade. And then as soon as the health of an account goes above zero, so we have a concept of like maintenance health and initial health. as soon as initial health goes back above zero, then the liquidation process stops. So we just liquidate things until the account is not underwater anymore and then stop. So
Yeah.
it's like a very integrated process. You have to be a little bit more thoughtful when you have a kind of cross account because you can't just like liquidate everything at once, or it's not like in isolated margin accounts where you do it one product at a time type of thing.
Yeah, it makes a lot of sense. And it's nice to have like an incremental process. So, if you get liquidated, you don't get completely hosed on your position and you just kind
Yeah,
of reduce the size until.
correct. I mean, I made it sound very incremental. The truth is, like, when people are like degenerately long or the market boosts and they get liquidated, that does happen sometimes.
Right.
We urge our users to be thoughtful about their risk management, but sometimes people just want to be speculatively long or short. That's just how people operate.
Yeah, and if you're trading Bitcoin, which is trading something like 80 vol right now, that's a 4-day 4% daily standard deviation. If you're 20x, that's a 5%. So you don't even need to move that much to wipe out your entire equity.
Correct. Correct. You did
So
the maths there very quickly. So yes, that is exactly right.
yeah, that makes sense. Um, okay, so last kind of question around Vertex, and then I'll jump into some more personal stuff. Um, Vertex has a token out. What's kind of the tokenomics of the Vertex token? How does that work?
Yeah, so right now, people can stake the token and they get a share of protocol revenue.
Oh, cool.
They also get like score basically. So we build a like VO Vertex score, we call it. So over time, the more you stake, the more you accrue, the higher your participation in the ecosystem goes. So like over time, we'll add governance functions as well as the revenue share. And we think that gives everyone like a chance to participate from small to large. And it means like you can't just game it by being big. You actually got to commit long term to the account. And so far, that's been very successful. We see like a huge percentage of tokens are staked of liquid tokens. And then people earn the tokens by trading as well. So we give out tokens to traders, and it means the people that most participate in the ecosystem are the ones that kind of get the most participation, which makes sense to us.
Ah, fantastic. Actually, I lied. One more question. As an options trader, is there any future roadmap to start trading options on Vertex?
Yeah, so it's a super interesting question. I think my observation with options would be that like they tend to pool to the first and biggest liquidity center.
Mm.
And right now that's Deribit. And so to compete with Deribit seriously, I think one would have to have a very option specific plan. And right now that's not us. I think, however, there is probably room for some options related products. So I actually have some thoughts about that. So would we add vanilla options in a Deribit style? I think probably not.
Mm.
But I think we could add some pretty cool options adjacent projects that I think would be very appealing to a retail user base. So that's something we're working on now.
Oh, cool. Fantastic. Okay, so kind of wrapping up here, two questions I like to ask normally. One is, what do you like to do outside of work for fun?
I have 3 kids, so when I leave this work, I go and do more work. But in between the spaces, I like to work out. I play tennis a bit, sport, hang out with family, like very like wholesome things type of thing.
Yeah,
I
great.
actually sort of probably the major hobby I had for a long time was stand up. So I was a stand up comic for about four or
No
5 years.
way.
Yeah, yeah, yeah. So
Oh,
I did
that's
a lot of
cool.
stand up comedy in the London area whilst I was working at the fund. Maybe that's why the fund was so quiet. Um, but yeah, I used to gig a lot doing that. So that I think that's probably my big hobby, but I don't do that anymore. It's more sport and stuff now.
Oh, that's fantastic. That seems like terrifying to go do an open mic and
It's like all things, right? Once you've practiced it enough, it's easy enough. Like remember the first time you pressed a button trading. I guarantee the adrenaline pumping through your system was like huge. But then once you've done it a bit, it becomes second nature. That was the same thing with stand up, yeah.
yeah, cool. And then last question here, throughout your career, do you have any favorite trading books that really stuck with you? that you'd recommend listeners to check out?
Yeah, it depends how nerdy you are. I think if you want like just generalized stories, I think Market Wizards is actually really good. Still stands up. It's amazing how old it is. And you read about guys that are like talking about trading on the floor by hand. Really stands up. I think in a similar vein, Reminiscence of a Stock Operator. Like that is a crazily good book about trading psychology. Like if you've ever managed large risk, that book will hit home with you. I think it's great. If you really want to like nerd out, there are a couple of options books I recommend. I think the one that's like semi-accessible by normal people is probably Dynamic Hedging, which is by Nassim Taleb. And it's actually his first book. A lot of people don't know that that was his first book. That was his first
Yeah, I
book.
didn't know that.
And a bunch of guys that first trained me are quoted in that book. Like he has
cool.
like little, it's quite nice actually. He does like little sort of quotes from conversations he had at the start of each chapter. I think about 2 or 3 of those are guys that I worked with at UBS in FX and kind of big characters in the market, very smart. So that was, yeah, it was fun.
Oh, that's fantastic. Do you have one more nerdy book? What's the ultra nerdy book? I'm curious.
There's a book called, I think it's called FX Options School.
Oh, cool. I haven't heard of this one.
If you ever wanted to become a like professional options trader, like a junior options trader, I think that's like a really good intro for people.
Oh, nice.
Yeah. I mean, there are other ones where they talk a lot about theory and blah, 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 but these are like more readable books for people. I think they're quite generalizable.
Well, that's fantastic. Darius, thank you so much for coming on. It was great to hear your background, learn about Vertex. Really excited. Go check out the protocol. Thank you, everyone.
Of course, my pleasure. Thanks for having me.
Absolutely.